Good afternoon. This is Tom Alexander. It is Sunday, September 11th. It's about 3:55 p.m. Eastern Time in beautiful Charleston, South Carolina. We have an interesting week coming up. Seems like we have an interesting week every week because if you're a trader, every week is interesting, right? But next week, we have CPI coming out. I think that comes out on Tuesday. You better check me. I'm notoriously bad about getting dates with stuff wrong, but you want to know when that's coming out. Now, we've had a furious 3 or 4 day rally. This was the possibility of this was alluded to in last weekend's report. The scenario was gone over in detail in that report. If you want to review that report, last week's report is linked to in this week's report. Also, real quickly, if you find value in this, please like it. If you have not subscribed to my channel, please do so and hit the notification bell, and you'll be notified when I post something new. Okay, so let's take a look at the charts. All right, I'm going to go through each of the indices, but the bottom line, real down and dirty here, is the S&P. Actually, all of the indices are either in the elevator shaft, and I'll talk about that more in a minute and the implications of that because it's very important. It's basically the range of August 22nd here. I'm sorry, August 26th. This was the Fed Chair Powell's, we're going to get serious market reaction. And we're already trading in that range in the S&P. We're just below it in the NDX. We're just below it in the Russell. We're just below it in the Dow. But the deeper we trade into this range, the more likely it is that we will retrace that entire range. That's not a prediction. It's just an observation, and it's a fact about how auction markets work. And again, I'll get more into that in just a minute. I'm trying to stay in the order of the report. But let's take a look at the S&P here. I've outlined, sort of highlighted some recent rallies, and in the low off the June low, we had a rally of about 7.78% from this low to this high. From this low to this high is about 6.7. From this pivot low to this high is about 6.14. Now, if we were to rally all the way up into this 4,200 area, that would be the strongest rally that we've had since this June low. Presently, off the low, we've rallied about almost 5%, not quite 5%. So this is very vertical. Now, a couple of things I want to bring your attention to. We're sort of in the middle of nowhere here, except for the fact that it's important that we closed in this elevator shaft. This is conviction. So if we're in a bear trend, you're not expecting really to see 4,200. We should, early next week, first of all, momentum as measured by breadth should come in. We should have lower breadth readings next week. And if we go higher in price, it should not be significantly higher. So that most of this range should hold. Now that sort of fits. If we look at the other indices, I'll go to the NDX here, because the NDX is not, well, it's just barely, the cash NDX is just barely gotten into that range. So there's a little bit of room for it to go a little bit higher in here. The Russell has not gotten into the range of the 26 yet. And the Dow has not gotten into the range of the 26. So there's a little bit of wiggle room here for the market to work higher without triggering the response that you often get when you reach these areas of conviction, what I'll refer to as elevator shafts. And that reaction is the big money created this move. So you want to see if they're going to come in and defend it. And if all of a sudden they've changed their minds, then you have just you'll have a rally on steroids as this is being retraced. Okay, let me see. Where do we want to go to next? I want to show you another view of the S&P. Here we go. I want to show you the weekly view. Now this is daily. I'm going to go to weekly. And on a weekly perspective, the importance of these levels cannot be overstated. This area up here, the high is around 4,300 and change. And then this recent low, this is last week's low. And you can see we're not quite in the middle of this range, but the intermediate term trend, I think, is at stake next week. So next week is an important week to be sure. Okay, let me see. Let's go to the profile view. Now I have a market profile lesson in the report. And we'll sort of go through it here when I can find my profile chart. Here we go, I think. All right, here we go. So this is the profile view. Now I'm gonna take out all the splits. And what you see here, this is the traditional market profile view that all the quote unquote market profile traders and educators use. There's an obvious high volume node here. And the knee-jerk response is, oh, there's a high volume node, that's the target. Well, yes and no. The market profile chart is a tool. There's nothing magical about market profile. It is a way of organizing data. And that can be a very helpful view in helping to determine market condition. But sometimes it's not helpful. And you have to really understand the auction process to get the most there is to be had out of a market profile chart. In this particular instance, what is far more important than this high volume node here is the August 26th range. This is conviction. So this day trumps all of this over here. So you have all the market profile people jumping up and down talking about high volume here, but it doesn't matter. It's been erased. This does, for practical purposes, it doesn't exist. The most important thing is this range and what is going to happen in this range, because there was extraordinary conviction on August 26th to the downside. There's only one party in the market that can create and sustain a directional move, and that's the big money. So we've traded back up into that range a little bit in the S&P, the SPX. And we want to see next week how the market, how the powers that be, the big money, is going to react to that. If they change their mind, like I said before, you're going to have just a ripping rally, probably to or through that August 26th high. But if we turn around from here, then we could have quite a sharp reaction back to the downside, perhaps test these lows. Which is it going to be? Nobody knows. It's a complete guess. But what you have to do as a trader then is to go get more granular in time frame and watch your price levels. And that's what we will be doing in the live trade room every single day. And I'll keep all you guys updated that are members. Now, another point to be made here is that this could be the proverbial double distribution forming, where, let me get a drawing tool here. Where we go straight up here like this, and then we develop here. So you would have a distribution here, you'd have a distribution here, and the magical single prints, really it's just sort of a chronological coincidence here. Single prints are part of conviction. So if the market continues higher off of Friday's low, you're just going to have more conviction. And because we are in the range of the conviction of August 26th, the higher we go, the higher the probability that this is going to be erased by this, and then this will become extremely important. So that's sort of the market profile lesson on applying auction market concepts using the market profile graph. Now let's take a look at the market internals. And since I landed on VIX, I'll talk about VIX. VIX is dropping. A dropping VIX volatility is bullish. That's the short of it. Now, it's a chicken or egg thing. Is price going to follow VIX? Is VIX going to follow price? I don't know. But if the market continues higher, VIX is most highly likely to continue to drop, and it becomes a feedback loop, and the market will work higher. Okay, let's look at breadth. And what we have, breadth has been positive 3 consecutive days. It was negative 7 consecutive days coming into last Wednesday. And we're getting the reaction that you would typically expect to get off of 7 negative days of breadth. I don't care, bull trend, bear trend, whatever. You get 7 consecutive negative days of breadth, and you don't want to be pressing the short side as a trader. So we're having we've had almost a 5% rally off this low. Breadth has been positive 3 consecutive days, but there's nothing extreme yet in the breadth work that I keep. So there's room for this market to go higher from that particular perspective. Now, something else where breadth comes into play, and this is important, and I've talked about this in previous reports. We had this rally that began June 14th, right here, and it lasted into August 16th, right here. And breadth behaved bullishly. The price-breadth relationship had a bullish signature in this entire rally. What that means is that we would reach a momentum peak, but the market price would trade higher on less breadth. And then when we would get these minor retracements, the retracements would hold around this negative 1,000 level, and then you'd get an immediate resumption in higher highs. And that occurred from the June 14th low into the August peak. Now, once we hit the August peak, the price breadth relationship signature switched to a bear signature. And what that means is when we reach these upper levels in breadth, we were very close to a price high. So once again, we are going to see a test of where we are in terms of trend in this market, because we had a huge thrust in breadth on Friday here. Now, price can go higher. It can go a little bit higher, but you're not expecting another 2 or 3% move from here if we're in a bear trend. And this has just been a bear market bounce off of the next leg down. And we're about to have another leg down. So price, I'm just sort of eyeballing this, should be contained in this area, this general area. Early next week, we should see another top and then another move lower. Now, if we get that move lower and breadth reaches this negative 1,000 level, we want to be paying attention to see how it reacts. So that's what we'll be looking for there. Okay, there are 2 markets that I put in the report last week that are markets that I trade very actively, and a lot of my clients trade very actively. Crude and gold. This is a weekly chart of crude. I put you can look at last week's report. I had this 85.73 area highlighted. We spiked dramatically below it, and then we bungee jumped dramatically just above it on Friday. Last week's range is important. In general, you want to be very careful about fading this market above 90.29 or fading it below 81.16. Let's take a look at gold. And gold started the week lower, but it also bungee jumped at this 1678-ish area remains critically important. So gold really hasn't tipped its hand particularly bullishly or bearishly. Crude spiked below that level. Now next week's range is critically important in crude. Guys, have a great remainder of the weekend, and I will speak with you again soon.